Yes, sir.
Good evening, ladies and gentlemen. I, Chaniksha, Senior Executive Secretarial of RACL Geartech Ltd, welcome you all to the post-result conference call of the company for the fourth quarter of 2023-24. I shall be the moderator for this call. Before we start the proceeding, all the participants may please be informed that this conference call might contain forward-looking statements about the company which are based on beliefs, opinion, and expectations of the company as on date of this call. However, these statements are not guarantees of future performance and involve risk and uncertainty that are difficult to predict. Further, you may please note that all participant lines will remain in silent only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, you may post your concern or query, if any, in the question answer box available on the right hand, or you may raise your hand as available in the right hand corner of the screen if you want to speak during the call proceedings. Lastly, please note that this call is being recorded. We have today with us the management of RACL Geartech Ltd, represented by Mr. Gursharan Singh, Chairman and Managing Director of the company, along with Mr. Jitendra Jain, Chief Financial Officer of the company, and Mr. Prab Meher Singh, Vice President, Finance and Business Excellence of the company. I now invite Mr. Gursharan Singh for his opening remarks. Over to you, sir.
Hello, colleagues. Hello, friends. First of all, good afternoon to all. In first session, is second call or first call during this financial year?
This financial year, first call.
First call. So last year we had achieved a growth, and it was almost 16-17%. We closed the years with good numbers. Against all the headwinds, we are still continuing to grow together, and we always relish and appreciate the confidence, trust, and support being given by all our investor friends, all our shareholders, all our stakeholders, and I do welcome all the colleagues on this forum, my friends who are sitting over here, my colleagues who are sitting over here, and all colleagues who are in our factories. Join me in welcoming you all. So, as our routine quarterly performance, we always share the key numbers, key highlights, and of course, then have it as a Q&A session. So I definitely now give the forum to Jitendra Jain and Prab to take it forward. So I'm always there to answer your queries along with my colleagues. Thank you,
Jitendra. Good afternoon, friends. Good afternoon, everyone. This is Jitendra Jain, the CFO of the company. I give a warm welcome to everyone. Luckily, after many days of heat wave, today we have a light rains, and the climate has become better in Delhi. So I think that's the good thing. So yeah. So we'll start with the presentation first. The next slide. Next one. Yeah, so this slide, I think most of you are already aware of this slide, but I'll just brief on this slide for anyone who has joined us our investor call for the first time. We have established in 1983 for FY23-24. We clocked an overall turnover of 423 crores, close to $51 million. Our product we have around 22 active customers and 900 plus SKUs in our portfolio. The products which we manufacture generally have applications in two-wheelers, three-wheelers, passenger cars, commercial trucks, ATVs, agricultural equipments, and industrial gears. We are headquartered in Noida. The company has two manufacturing locations, one at Gajraula and one at Noida. Our corporate office is based at Noida, and we have three warehouses in Europe. Our our product range are transmission gears and shafts, sub-assemblies, precision machine parts, chassis parts, and industrial gears. Our core strength and core competencies are in gear cutting, precision machining, aluminum machining, process R&D and concurrent engineering, heat treatment, sub-assembly, laser welding and laser cutting, and export logistics handling. We are rated A minus. Credit rating is A minus by CARE. We are listed on Bombay Stock Exchange, and we have 100% subsidiary of RACL Geartech Ltd, which is based at Austria. The company has all the certifications which are required, which is ISO, IATF, and T6 certifications. Next. Coming to the financial performance for the last quarter of financial year 23-24 and the full year. So this slide gives quarter-on-quarter comparison of the numbers. The company has achieved a turnover of close to 115 crores in Q4 of FY23-24 as compared to 96.31 crores of same quarter last year, which is a growth of close to 19.32%. Our EBITDA margins have grown to 24.45 crores as compared 24.45% as compared to 23.61% of the same quarter last year, which is a growth of close to 3.5%. However, our PBT on quarter-on-quarter basis have declined by almost 16.87%, which is
1.6.
16.8. Percentage terms. Percentage terms is 16.8%. But this is predominantly because of higher depreciation and a slight higher financial cost. Yeah. Basically, this is quarter on quarter. Next one. This is the full year performance. Basically, I'm happy to share that the company has clocked a turnover of 423 crores in FY23-24 as compared to 367 crores in FY22-23, which is a growth of close to 15%. Our EBITDAs have grown from 101 crores, close to 102 crores, as compared to 90.68 crores, which is a growth of 12.4%. Whereas from 51.33 crores to 53.74 crores, which is a growth of 4.69%. Now, this slide gives a snapshot of all the key issues which are there. I mean, we'll leave this slide for a few seconds for people to get it, look at it. Next. So this is a slide which I wanted to everyone to focus on. This is a brief snapshot of slides are not just friends. This is a rich in movement of these. किसी को नहीं दिखाया हैव यू रिसीव मैसेज या आप ऐसा में आपके इस पे नहीं आता काम कर उसमें मत खोल नॉर्मल बोर्ड
उसमें पीपीटी मोड में कई बार नहीं चलता।
में हाँ ये पीपीटी चल रहा है सारा शेयर
Roughly 11 crore is actually
replacement. इसको ऐसे ही रहना I'm extremely sorry. I think there was some technical glitch while we are displaying the presentation in a PPT mode. So we'll display in this mode. I hope everyone is able to look at it. So this is the slide which gives the snapshot of brief of our financial ratios. So we'll leave it for a few seconds for everyone to just capture it. Next. So this is the slide which basically gives a snapshot of company's performance in last 3 years. So in from FY 2021 to FY 2024, we have grown our turnover by in absolute terms by almost 2 times, and our EBITDA margins have grown by almost 1.8 times, and our PBT margins have grown by 1.78 times in last 3 financial years. Thanks. So coming to the latest developments and business updates. So this is regarding the Project Titan. Basically, the Project Titan was, if you remember, last time we had shared that the company has received a nomination as a tier 1 supplier, series supplier for a premium German car manufacturer for supply of parking lock mechanism for passenger cars. So this was one of the biggest milestone in the history of RACL, where RACL has been nominated by a car manufacturer as a tier 1 supplier. So just wanted to give an update on the Project Titan. So basically, if you see, this is a overview of our plant at Gajrala. So we have already allocated a separate shed for the Project Titan. First set of plant and machinery which are required for these projects are already being ordered. The joint inspection of the production of samples along with the customer has already been completed. The customer was here last week, and the joint inspection of the production of samples is already completed. The functional build samples for assembly trials at the customer lines, it is expected by July end. Then the next build phase on series production line is planned in February 2025. And then if everything goes off well, then we are expecting the start of the mass production last by August 2026. Second update is on the Noida plant, which we had shared last time, that the company has shifted its Noida plant to a bigger location in sector 80. where the plant is almost 23,000 square feet in feet. So the 32,000 square feet. So just I'm happy to share with everyone that the plant is fully operational now, along with the official staff. The all machineries which are required there have already been installed. We have shifted majority of the plant and machines from our older plant, and few of the new machines have already been installed, and the plant is fully functional now. I'm happy to share that it was a great effort by our entire team, including of course the team of Noida plant, and we had been able to shift the entire plant without a loss of even a single day of production, sir.
Yeah.
Without a loss of a single day of production. So that shows the team efforts and team strength of RACL. Next is if you friends, if you remember last time we had shared that we had lost some of our business in FY23-24 because there was a mismatch in the gear grinding capacity last year. The gear grinding capacity, which was supposed to be fully functional, installed and functional by around July-August, if the machines got delayed and all, and finally the machines had come in, and the full-fledged gear grinding capacity became functional by January, December and in January. So I'm happy to share that that mismatch in gear grinding capacity, which had impacted our business in FY23-24, it has been rectified. In fact, learning from this experience and all, we have now ensured that because gear grinding is one of the most important part of our manufacturing process. So we have now installed a sufficient gear grinding capacity, keeping the projected growth in mind, including a bit any such exigency in future as well. So thank you. This was an update and on the financials and the performance of the company from my side. We can open the meeting for questions now.
Yes.
Start with we have received questions from some people.
Yes, maybe you can unmute.
Divyansh.
Yeah.
Yeah. Hi, everyone. You can hear me?
Yes, Divyansh. This is Divyansh, correct?
Yeah, Divyansh.
Yeah. Hi, Divyansh. Yes, please proceed.
Okay. Sure. I have, let's say, 4 questions which are on the same topic. So I'll go one by one. So just first wanted to understand that from last year annual reports or previous ones, I see that the company has been using bill discounting as a mechanism for cash generation. So first question is that in an accounting treatment and in cash flow statement, where does the cash generated or mobilized from bill discounting captured? Is it cash flow from operations or is it in financing activity?
Yeah, so Divyansh, we follow the Indian accounting standard here, and on a conservative basis, whatever the bills we are discounting only export bills as of now, and so our receivables remains outstanding as a part of our operating activities. We do not knock off the receivables, and the bill discounting cash portion basically is there in our books as bank outstanding, and as against this, the cash from the financing activities get impacted. We do not knock off the debtors because ideally, I mean, some companies I understand may follow once they discount the bills, they knock off the receivables, but we do not knock off the receivables. So receivables are there, and once we receive the payments, actual payments, then the bill discounting that gets knocked off.
Got it. So therefore, the account receivables that is there
in
the financial statement includes the bill discounted amount as well.
Yes.
Yeah, actually, as a corporate governance, just to add what Vijay said, as a corporate governance, we do not knock off the bills until we get
knock off the receivables. Knock off the receivables.
So we don't actually knock.
We do not knock off.
So we always show as account receivable. So that is a corporate governance we maintain.
Understood. And
Divyansh, I would request in this paucity of time, if you can brief your questions into, we'll come back again, but if you can have 2 questions per person, please.
got it. So the second question is, see, if I see our cash flow statement, right?
Yeah.
30 crores of cash flow from operations, and our interest is around 26 crores, right?
23 crores, 23
24
crores,
23
crores.
right? And because of the elongated working capital, which is expected to go up even because of, let's say, export orders increasing more, seems that we will always be cash constraint, and we'll always keep on um, taking more debt to keep continuing our operations. So the question is that what are the levers that the company has to, let's say, optimize on the working capital? Because it's becoming a drag in our overall part. We get the top line, but does not show up in the bottom line.
No, so Divyansh, to answer your question, we need to understand our business model. Now, please, if you look at the other auto component suppliers and all, now our almost 73% of our turnover is exports. And okay, and which is the reason our EBITDA margins are close to 25%. Now exports when they are there, and one more thing, if you would have noticed, our raw material component is just hardly 30%. The rest is all value add. So of course, our overall manufacturing process is longer, and then the exports generally have a higher working capital cycle, but that gives us a higher margin as well. Now, whatever, because this higher working capital cycle portion, which is there, which is part of the working capital, which is part of the overall export mechanism, we basically generally built in.
I'll add what once you finish.
Yes, sir.
No.
Yeah, okay. You'll also add. So Divyansh, we basically the costing which we do is on a per part basis and all, and this working capital elongated cycle, first of all, that is part of my costing there. Now, second thing to answer your question, yes, we understand that higher as our exports volumes will increase. This time in FY23-24, there was a bit of a disturbance because of the Red Sea issue, which most of the people had faced and all. And when the Red Sea crisis had started and all, the overall shipment days have almost increased by 25 to 30 days. It has come down to almost 10 to 12 days now. And
I will also add what JJ said. Look, Devansh, to tell you very clearly, when export is growing, when our business is growing, top line is growing, obviously working capital will grow. So there is nothing to shy away from.
I understand why it is growing.
That will grow because, let me complete. Our working, because if we are growing every year 20, 25%, 30%, obviously a major growth is coming from exports market. Obviously, export receivables, nothing is going to change for me because if shipping time is 70 days, shipping time is 70 days. We can't really do much. Eventually, customer has to pay its own receivable time. So eventually, when we grow our business, when we grow our business cycle, obviously working capital will also grow. So there is no cause of worry for that. The only thing is your business should sustain this. A business is sustainable because our costing takes care of that. Because, if you're having higher volume of working capital, so eventually we have to pay additional working capital cost or additional finance cost. But if our business or our costing takes care of it, then there is no cause of worry. Because when we do the product costing for export market, we always cushion that additional cost burden erupting out of higher receivable. So there is nothing, our costing takes care of this. So there's no cause of...
Actually, sir, my question was a bit different. I understand why it is high. But the question that I was trying to understand, that do we have any lever where somehow we can reduce it, let's say through, inventory or
this is, I understand, Divyansh, I understand what you're saying. So this year, the only one way which can happen is that we get a corresponding growth in domestic, because the blended working capital cycle will come down. But as long as my export business will increase, the export as compared to my peers in the export business and all, my working capital cycle is in line with the overall manufacturing process and the time it takes to reach there. One more thing we need to understand here, that most of my buyers are top AAA rated companies like BMW, Kubota, BRP, and also where hopefully there is no risk of any bad debt and all, and RSL never had a history of any bad debt and all. To answer your question on the levers part and all, yes, we understand that part, and we one thing which hopefully we are focusing on this financial year is we are focusing on the domestic business as well. There are a couple of advanced discussions which are going on because the overall working capital cycle on the domestic side is much lower than exports. So that is one thing which we are working on. So hopefully we'll that should, and this Red Sea crisis is ending. So the whatever the 20-25 days of I think 15 to 20 days of additional working capital cycle which has come in, that will be taken care of.
Got it. Okay, I'll
thank you.
join
Thanks.
with you.
Thank you. Thanks. Next is
Ankush Agarwal.
Ankush Agarwal. Ankush is there. Ankush.
Audible?
Yes, Ankush, you're audible. Please go on.
Yeah, so my first question is, FY24, if I look at our growth, it's relatively lower than what our internal estimates were, around 470 crores of revenues. And considering other facts, that the kind of investment that we have been making in the business in the last 2-3 years, the kind of order which we have got. So what are the challenges that you have faced? As a result, we have not reached the number that we have targeted internally. One of the reasons that on the grinding capacity you had highlighted, but anything else that that has impacted this performance, and how do you see execution going into FY24?
Ankush, it was a combination of problems, as you yourself indicated that once there was a short of grinding capacity was an issue. And of course, that was one of the contributing factor. And secondly, there was a slight, I will say, headwinds in European business, because European trends are showing a bit of slowdown. That also had a little impact, but it was a combination factor. But eventually, if we would have the grinding capacity with us, we would have recovered the entire thing. Because our business model is such that we are a diverse product company. So if one segment is down, other segment is up. One product model is not there, other product model is there. But it was a vicious cycle. That product model for which we had the capacities, there was a little headwinds on that. And the grinding capacity one was a major contributing factor due to which we could not do it. But now eventually everything is in place, and we are trying to now get back to the original forecasting numbers. Yeah.
So the 550 crores that we are guided for FY25, that stays on time, right?
Yeah, exactly. That's the reason. Yeah, you would have understood that eventually, if we have targeted from 423 to 550, so it's almost over 30% growth. So eventually, now we have the real capacities which we created last year. Although those capacities were delayed for almost 6 months, now everything has come into place. And eventually, if nothing untoward happens, so on this geopolitical things, so things will really work in the right direction now.
Okay. The second question was on the capex. So I think earlier we had guided that this year it would be around 60 crores. Any change to that number? And in line with that, another commentary that was said that since the capex would be lower this year, we look to reduce our long-term debt this year. So
yes,
on that line,
yes.
That's still there. That is still there.
That is valid. Yeah.
That is valid.
Yeah. In fact, the good thing is that whatever investments we are going to make this year, they will be primarily for preparing for the subsequent years. Right. So to be very honest, for this year, by and by, we are covered. But future years, since we